All right, guys. Happy Tuesday today. This is Anthony Perlas from the Daily Flux. And today's topic, we're going to discuss about money printer go Brrrr, Bitcoin solution for the Federal Reserve. Written by Connor Brown. Money printing is an old problem. History is littered with societies that attempted to print their money into prosperity. Despite lessons from the past, this confusing ritual still continues to this day, courtesy of central banks like our Federal Reserve. As a solution to the damage dealt by money printing, Bitcoin was born. In the depths of the financial crisis, Satoshi Nakamoto created Bitcoin as an alternative to the broken monetary system. A Japanese, it looks like. Bitcoin was designed with a hard cap of 21 million coins, which will be mined over the coming decades. Meaning, as more people have Bitcoin, the scarcity of the Bitcoin becomes more, increasing its value. And basically, the whole which is helpful. I understand people need money, but we're going to discuss later. But basically, the more money circulating around, the less value it has. So it doesn't really encourage saving up for the future because of inflation. We are witnessing a second, back to the article, serious financial crisis now sparked by the coronavirus. Stocks are in freefall, currencies are swinging wildly, and credit markets are frozen. In an attempt to calm the financial system, the Federal Reserve has been printing out money like never before. What began with a few $1,000,000 has now morphed into trillions of dollars per month in liquidity injections, quantitative easing, and credit facilities. On top of this, Washington is pumping trillions of fiscal stimulus. Meanwhile, Bitcoin's policy remains untouched and as strong as ever. For someone without a finance background, the actions by the authorities may appear confusing and arcane. Where exactly does this government money come from? This article aims to clear that up. I'll begin with a breakdown of how money printing works in the legacy financial system and then compare that to the Bitcoin solution. A peek behind the Federal Reserve's curtain. The Federal Reserve System, FED, is our central bank. It is operated by a series of 12 regional reserve banks with economists and financiers who follow the decisions of its leadership, the Board of Governors. It is often said that the Fed can print money. However, this is not spinning up the printing presses and putting that money into the hands of whoever wants it. The process is a bit more involved. First, remember most dollars are not physical. Physical banknotes are only a small amount of money in circulation and are created by the U.S. Treasury at the discretion of the regional reserve banks. Most of the time, money is created in the Federal Reserve System with a stroke of a keyboard. So how exactly does the Federal Reserve print these digital dollars? The secret lies in its balance sheet. To explain, let's quickly review some accounting basics. A balance sheet is a record of assets and liabilities of an entity. For example, a business may have assets such as cash, inventory, and property. Its liabilities would be rent, loans, wages, etc. The balance sheet is a snapshot that records these totals and ensures a company is properly managing its budget. Banks also have a balance sheet. On this asset side of their balance sheet, banks generally have cash, known as reserves, loans, the expectation of future payments, and the financial instruments, such as bonds. On the liability side, banks have deposits, money to be paid upon request, and equity. This is how banks make new loans. When a borrower needs a loan, the bank will place virtual dollars in their account and record that the transaction is both an asset, the expected repayment of the loan, and the liability. So, if credit is both an asset and liability, what stops bank from making unlimited loans? Capital requirement ratios. These are rules and regulations that prevent banks from expanding their balance sheet and taking on excess risk and lending. Central banks hold the money of commercial banks, and they also have a balance sheet. On that balance sheet, they have assets on one side, just as government bonds and cash, and the reserves on the other, which is where the commercial banks have parked their money. Now, what's special about the Federal Reserve is that their balance sheet is unlimited. They can buy as much government securities as they want at any price and simply place it on their balance sheet. For example, let's say the value of mortgages fell by 40% and banks need a boost. The Federal Reserves can bail them out by buying those mortgages at whatever they deem to be correct price and placing them on their balance sheet. It's that simple. And this is exactly what happened in 2008 when the Federal Reserve purchased over 600 billion of government-insured mortgage-backed securities to artificially increase the value of mortgages and thereby reduce the cost of borrowing. The program was just the beginning. Over the past decade, the Federal Reserve has purchased trillions of dollars of government securities and placed them on the balance sheet. This has in effect manipulated markets and monetized the U.S. national debt. Below is a chart of the Federal Reserve total assets on its balance sheet. After our initial jump in 2009, it has continued to make new highs for the decade. You can't really see this. Can you see this shit? Where the fuck is it? Yeah, so that's the balance sheet, motherfuckers. Yep. Okay, let's go back. Okay, I lost myself. Okay. The latest spike is due to the variety of programs the Federal Reserve has instituted to prop up markets. Just last week, the Federal Reserve stated it will purchase $625 billion per week in government securities and establish multiple special questionable legal vehicles to purchase commercial paper, asset-backed securities, and corporate bonds. All of this will go into the Federal Reserve's infinite balance sheet to 1. Bail out institutional investors that took on too much risk, and 2. Pay for trillions of dollars of stimulus from the federal government. Each edition is printing money, full stop. And as the Federal Reserve has just assured us on national television, there's an infinite amount of cash at the Federal Reserve. While these actions may provide short-term stability like any stimulant, they bring a nasty set of side effects: asset price inflation and wealth inequality from cheap debt. As the money printing pushes the cost of borrowing artificially low, corporations have taken on massive amounts of low-interest debt to finance trillions in stock buybacks. The stock indexes have increased several 100%, while economic growth has been lackluster, causing massive inequality and social unrest. This phenomenon, where those closest to the newly created money see disproportionate benefits, is known as the Cantillion Effect. Economic stagnation by protecting poorly managed firms, bailouts, prevent the capital to be reallocated to more sophisticated and careful management. This rewards poor decision and creates unproductive zombie companies which lingers for years. For reference, see Japan's lost decade and the sluggish economic growth of the past 10 years. Erosion of purchasing power by devaluing the US dollar. As money is printed and currencies lose their value, this most severely impacts the savings of the average citizens. This punishes people who use their money as a savings vehicle and creates strong incentives for excessive consumption. And just a thought of that. Just like you can't really fight your conscience. You're kind of grown up, you have your own programming. As Americans, we were made for the money we were meant to spend. We are a consumer. The way we share is by purchasing products and services. The communists out there, they fucking spend time with their families, give back to the community. How we do it is we fucking work hard, we purchase shit, and we buy shit, we get a fucking Ferrari. That's how we're made. Money is the reason we exist, and that's how you want to do it. We can't deprogram from that programming. That's what just simply makes Americans. It's the American dream. Communists will say the Eastern philosophy is you don't need as much, all you need is family, all you need is personal relationships. But think about it. Did you really have time enjoying those people who sees and devalues you and doesn't see you as a person, really? They're not impressed with you. They see you as someone lower. Or will money actually give you the title that you need, and the power and authority and the respect that you so deserve? So don't listen to the communists, these fucking socialist people who will tell you that, yeah, money is not important. Be like fucking Buddha, spend less so that you can be happy. Money means happiness, guys. Everyone who says so Who says otherwise is a fucking liar. So don't go against your programming. Keep fucking following it. Unsustainable deficits through manipulation of interest rate, as the Federal Reserve purchases trillions of government bonds to drive interest rates below the natural rate. Thus, the government is able to borrow larger and larger amounts of debt at the cost of future generations. Systematic fragility by centralizing financial institutions, printing money to bail out too big to fail banks, while letting the smaller financial service providers go bankrupt centralizes our financial system. With fewer competitors, this makes the remaining players even more powerful and more fragile. The pervasive system of incentives all but guarantees future bailouts down the road. In the eyes of the many concerned citizens with longer time horizons than the upcoming election cycle, this is the wrong path. Sacrificing our future to pay for the present will only usher an era of poverty and disrepair. Thankfully, Bitcoin provides another way. The Bitcoin solution. And for those who don't know Bitcoin, you essentially download an app on your phone. You spend like $800 and you get like a couple dozen of Bitcoin. I forgot the currency rate. But you don't actually, I think one Bitcoin is like at least a couple $1,000. So you would get 0.0 money. And it's just a more secure transaction. A lot of bodybuilders use it, and yeah, you can use it for anything. But yeah, it's basically a virtual currency. It is legit. I personally used it, and many are using it. It's not quite mainstream. It's really hard to. I was reluctant and skeptical to use it at first, but it works, guys. It works. The Bitcoin solution is a virtual currency created in 2008. What makes Bitcoin unique is that it is the first scarce digital asset without a centralized owner. The Bitcoins are created, sent, and received over the peer-to-peer protocol without any intermediaries. Bitcoin uses a form of database called a blockchain, which creates a linear history of changes to the ledger that cannot be undone. For a technical introduction, see this video. And I can probably link that video. But this data doesn't really mean much to you. It's really hard to understand, but it just shows what a Bitcoin is, how it works. You can probably screenshot this and maybe explain it later. Okay. The linear history is created by a series of blocks of transactional data. These blocks are mined and propagated about every 10 minutes. Mining is a process where computers around the world compete to solve a math problem which generates the next block. Miners spending their computing power are compensated in newly minted bitcoins, which are called block rewards. The number of bitcoins for each block reward is based on a simple function. Every 2,100,000 blocks, approximately 4 years, the block reward is cut in half. For the first 210 blocks, the rewards were 50 bitcoins per block. A block at block number 210,001, rewards were cut in half by the protocol to 25 bitcoins per block, which also cuts the inflation rate in half. This event is known as halving. Soon, Bitcoin will enter into its fourth halving era, where miners will receive 6.25 bitcoins per block. The process will continue until around the year 2140, as shown below. So, this shows more of the Bitcoin. We are there. As you can see, Bitcoin's monetary policy is strictly set to 21 million coins, no more, no less, because Bitcoin is decentralized. No entity can print money, bail out their politically connected friends, or dilute the value of your time. With a predictable supply, Bitcoin's monetary policy is ideal for market participants. Under a Bitcoin standard, money no longer decays over time. Ordinary people who would not have to invest in risky financial instruments to preserve their wealth. This brings profound benefits and motivates individuals to plan their future and protect their savings. Money can be thought of as a measuring stick of value. By having a steady measurement, Bitcoin allows to freely fluctuate to the supply and demand of the market. Powerful countries could no longer manipulate trade and currency to the detriment of the developing world. No country would have the luxury of a global reserve currency status. This shift would cut out legions of financial middlemen, and the world could speak one global language of value. Conclusion: we are witnessing the late stages of a confidence game. Those in power can be greased to the palms of their friends at the expense of everyone else. It has brought decades of economic stagnation and inequality. While the future is far from certain, we now have a escape hatch. With Bitcoin, there is no lever, there is no committee, there are no printers, there is a level playing field of 21 million coiled hard coins. And that is the way it should be. Alright, guys, that ends it. Let's do it.